Lady from Utah, Ms. Love, for 5 minutes.
Thank you. Thank you, Mr. Chairman, and thank you for all of our members who are here, or our witnesses who are here for this hearing. I really appreciate it. I want to start off with Mr. Wallison. You may have noticed a slide being displayed over the course of this hearing that cites the Federal Reserve's data indicating that commercial and industrial loans are up 75% since Dodd-Frank became law. The graph represents trends for loans and leases in bank credits for all commercial banks through December 2016. So in your opinion, well, in your experience, do you think that that figure is entirely accurate?
No, actually, I don't understand that.
Okay, so in what ways do you think that there's room for nuances in explaining that trend?
Well, for one thing, all the data that we have seen shows that the banks have not yet reached the point where they were in 2008. Mm-hmm. The banking system as a whole, except for the very largest banks, they're doing quite well. But in terms of return on equity and return on assets, they're still below where they were in 2008. In addition, and this is the most devastating fact about this whole situation, and that is there were 25 new banks in 2009. There were 9 in 2010. There were 3 in 2011. And since then, there has been either 0 or 1 in all the subsequent years. Now, what does that say? That says that the banks cannot make a profit. Otherwise, people would be forming new banks. So we have a serious problem here with this legislation. We have to get this out, and we have to start relieving the pressure on our community banks.
Do you have that graph that we can pull up? Does staff have that other graph that we pulled up where we separated large banks and small banks? Go back. There we go, right there. So before, can you look at the one before Dodd-Frank, please? When we took the data and we separated between large banks and small banks, the data before showed that small banks, you can see the difference between small banks and large banks.
Yep.
Now look at the data after.
Yes. Which
tells me that large banks are doing okay, and small banks are the ones that are providing less access to credit for those who need it in their communities.
That's right. In my prepared statement, I have a couple of different charts with lines on them, but show exactly that, and that is that the loans from the large banks have been going up, and the loans from the small banks have been going down. Large loans have been going up, and small loans have been going down, all consistent completely with the idea that the small banks are gradually going out of business because of the regulation, and the large banks are taking up whatever new business there is.
Okay, so I'm being as fair as I possibly can here. Who are the people that small banks lend to versus the people that large banks lend to?
Well, the large banks are not lending to the very smallest businesses. They are lending to the larger small businesses. But the really troublesome part is the startups, because in our economy, fortunately, and this has always been true, everything starts from the bottom. And the little companies that develop over time are the ones that eventually become the big companies and displace, in many cases, the big companies. The startups are the most in trouble now because the smaller banks lend to the startups, but they make what would be called character loans. They're making it to people who they know in the community. And those loans are not being made anymore because the bank examiners are stopping them from doing it.
Let me tell you the people that I represent who are actually getting less access to credit because of the burdensome regulations that are being imposed on our small bank communities. Now, people may say that this is not really about small banks and large banks, and we're not really here to help the small banks, but I'm telling you right now, when you get Jennifer Jones, who can't get a loan from her small bank in her community to expand her school, that affects middle to lower income families. When you get Brett Madsen in Sanpete County, who has a turkey farm that can't get access to the credit that he needs in order to get the tools that he needs to farm his turkeys, that affects the people in his community. Goldman Sachs is not in Sanpete County. You know, JP Morgan Chase is not in Saratoga Springs. And all of the banks that give them access to credit are closing their doors every day.
Time of the gentlelady has expired. The chair